We are just kicking off earnings season for Q4 2018 here in January 2019, and one of the most important stocks, and I mention it often to my clients, as far as I'm concerned, is really JPMorgan. Not only in terms of how it reacts to the broader market, which I'm going to show you guys here in just a minute, but also in terms of the read-through that that company has to not just the U.S. economy, but also other economies around the world, for example, Europe. As my former alma mater, I can tell you, I do think a lot of the sort of mysteriousness around the company is true in the sense that they have just a lot of power and a lot of real insight just because of the nature of their business of banking into the economy. So what I want to show you guys is I think a really important chart to contextualize how closely this stock tracks the S&P 500. It's a simple chart, but it's I think really important. And so what we're looking at here is just that. I made the S&P 500 the candlestick chart, so that's this one here, and then I overlaid JPMorgan, which is this blue line here, and you can see how it really these two assets really do track each other more or less. And so from that perspective, you can make some inferences on just a chart of one versus another. So for example, I look at JPMorgan right now and I see the stock, even though there may be a little bit more upside in the near term, there was a lot of topping out happening last year, and the fact that we ended up breaking below about the low 100s, maybe 105 or so, I think was a really important tell. And then we have all these moving averages now, the 50, 100, and 200 day, all sloping lower. Now that's just a technical aspect of it all, but I do think this plays a good role. Now if you look at this and juxtapose to the S&P 500, where if you've been following me for a while, you know we've been talking about that I thought, and I continue to think, that this drop off here that we saw in December of last year was really to a good extent the result of basically a lack of liquidity and some program-driven trading. I think a lot of hedge funds actually closed trading for the year late November, early December, the people I spoke with at least. And so that really withdrew liquidity. So now if you look at this, and again, you use both JPMorgan and the S&P 500, you can get inferences and just kind of make a better judgment call in the broader market as far as I'm concerned. How do I get back to the camera? Here we go. Then you can see here, just like in JPMorgan, we are actually already in a layer of resistance that's ultimately, maybe not in the immediate term, but at some point this year could see the S&P squeeze as high as 2,800. But I think right now there's a lot of resistance here. So again, I just wanted to make that point that I think both JPMorgan and the S&P obviously very important, and they do very much trade in sync with each other. So just a simple chart, but I think a really important thing to be, oh, it's a lot of sun here, a really important thing to be aware of. Very few stocks act as closely like the S&P as JPMorgan does. So just be aware when JPMorgan moves, when it's on the move on any given day, if it's up big or down big, when they report earnings, what they have to say, the outlook. I think it's all very, very important in terms of the broader market. So hopefully it makes sense, folks. I'll see you soon. Take care.